Hello traders, welcome back to a brand new video. In this video, I want to show you how to catch some big wins in the Forex market or even the indices market. So you will choose which pair you're going to trade, but specifically we're going to use the higher time frames to catch the lower time frames with small stop losses but with huge wins. This will suit those people who are using a small account and even those who are having a big account who just want to double up their trading accounts. So in this video, I want to show you the simplest way to double your trading account using this method. But I'm not going to touch on the trading strategy in full because I have covered that in the previous videos. You can go and check them out. I'll put them in the video description below. So the first thing that you need to understand is that you need to be patient to hold trades for a longer period of time. So meaning if you're trading on the daily time frame, you're going to hold that trade maybe specifically for a period of 3 weeks or so, or even 2. It depends how the market moves in that certain time. So, and also you need to understand the broker that you are using, because if you don't understand the broker that you are using, you're going to have a big problem because some brokers charge a lot when you hold trades for that period of time. And before we move on, you need to understand the strategy. I'm going to explain a bit about that. And also in the higher time frame, you need only the confirmation candle and the basic market structure. But I'll also show you when we move on to the real example, because that one is going to be a little bit easier when you see that pattern and you will understand even better. If I have missed something else, that means I will cover up in the next video. You can just comment below and then I will cover up in the next video. And then in the lower time frame for entries, you need to understand the time frames, guys, because I see a lot of people, they get confused when they move on, like maybe let's say from the daily time frame to the lower time frame, they get confused by that. But I'll make it easier for you. And I have covered that before in the second video that I have posted on this channel. And you need also to understand the market structure and entry level. But don't worry, this video will cover up most of the things. So right now, let's move on to a real chart so that we can start with the example, the first example. So in the higher time frame, you need to have something like this. If you are looking to enter a short position, you'll be looking for the market to move higher like this, and then once it does something like this, it breaks the previous low here. It will break this previous low around here, and then what you need to do right now is to wait for the market to come to this supply zone over here. You will have this supply zone over here, and then what you need next is to wait for the market to come here and make a bearish candlestick. And another thing that I want to point out is that this bearish candlestick here, the wick must not close above this previous high here. So you will have something like this, but this one will invalidate the whole pattern. So you need something like this. So in this higher time frame, let's say maybe we are on the daily right now. So the next step here is to put a horizontal line above this on the open of this bearish candlestick here. So your analysis in the higher time frame will look something like this. This is your whole analysis in the higher time frame. So in the lower time frame, you will need to find the same structure here, and this line will guide you to enter the market around this area here. So it will be easier for you to understand this if you have a confirmation candle on the higher time frame. And you can also use this. The higher time frame that I basically use is the 4 hours, the daily, the 12 hours, even the 8 hours time frame, because I have a premium membership with TradingView. And then the lower time frames, mostly it will be the 15 minutes, 30 minutes, even the 1 hour. The 1 hour specifically is for daily time frames and even the weekly. So it will be easier that way to understand. So let's move on, because right now we understand the higher time frame. So in the lower time frame, the only thing that you need to do is find the same structure. It will be maybe, let's say we are moving higher like this, and then like this. You will see that the market will be around here, and this line here, the higher time frame horizontal line, will be maybe, let's say, around this area. So the next thing that you need to do is find the supply zone again around this area. So that's basically it. So your analysis will be like, okay, I'll be waiting for the market to come to this area, and then I will short around here. It will be a little bit like this. So for take profit levels, you will target the higher time frames lows. Like from this area here, you will target this low and even this low. So it will all depend on the structure here. But if the structure is very corrective, you will target this low here. This will be your one major take profit level here. So right now, because I've been talking about this, let's move on to a real chart so that we can see this in real time. Okay, right now we have a bullish trend like this on the 12 hours time frame. Okay, it's 12 hours. We have this 12 hours time frame over here. And then another thing that I want to point out is that when the market is moving like this, it's not very aggressive to the upside anymore, because we can clearly see that it was aggressive to the upside, but then it started to be very, very slow. And most of the time, this will be your reversal. This will look something like this. This is a reversal pattern here. We can see we have 1, 2, 3, 4, and 5 around here. This will be your A, B, C, D, E, and whatsoever in Elliott wave. The only thing that you will be looking at is around this high here. After the market has broken this high here is when you can look for the market to reverse to the downside. So your analysis will be like, so that means you will target this low here and even this lows here. This will be your only take profit levels. Okay, so right now let's look at this area. We will look at this area here first. From here we can see that we have a break in market structure around here. If we move on to, let's say, maybe the 4 hours, you will see that this is a clear break in market structure. I won't even consider this one here because the market is making a reversal pattern in the whole picture. This is a reversal pattern here. So from here, guys, what you need to do is to find the zone around this area. You can see that we have a supply zone here. And then the next thing that we need to wait for right now is the next candle to close with a bearish candle but not trade above this high here. Okay, and you can also see that the market also closed this fair value gap around here. Okay, you can see that we have an imbalance around here. So right now, let's see what the market prints on the next candle, because we're still on the 4 hours. I'll reduce the speed over here. Okay, we have this bearish candlestick, and as you can see, the market didn't close above this high here. I mean, like, the market didn't trade above this previous high here. So that means we will be looking to enter the market around here. We will put a horizontal line on the open of this bearish candlestick. So in the lower time frame, we will be looking to enter the market around that area. So right now, let's move on to the 30 minutes time frame and see what the market hold for us. So before we move on to the lower time frame, let's put another horizontal line for our take profit. We will put this line over here. We'll change the color to green to show that it's money down there, and then we will put another one here. Okay, because right now, if we enter the market in this time frame, that means we will be risking 62 pips and then targeting the first take profit, which is the 200 pips, which is a little bit low in our take. So, and then another take profit will be around 400 pips, which is still low. So right now, let's move on to the 30 minutes and then reduce the risk. So right now, as you can see, we have a bullish trend over here. So right now, we need an entry around this area here, above here. So that means we need to find a bullish candle before this move. And as you can see clearly around this area, the market is moving in this kind of manner. We have a bullish and then a bearish, bullish again, and then almost broke to the downside, but then it retraced back and then it shoot lower. So this means the market is not bullish anymore from this area here. As you can see, we have a bullish move and a down and a move up and then a move down. The market tried to push higher, but then it broke this previous low. So that means right now we need to find a bullish candle before this downtrend here. So let's do it. We have this bullish trend here, the bullish candlestick, I mean to say, and then our analysis. So in this area, guys, you will risk 27 pips right now. Okay, so that means you can put your sell limit order around here and then target this first take profit here. This will be your first trade. So right now, as you can see, this is a 1:8 risk to reward. Okay, but then we can also reduce the risk. If you are someone who trades the lower time frame from this area, you can also use maybe the 15 minutes, but I don't think you should go below 15 minutes when you are trading the higher time frame, because in the lower time frame you might even get confused because the market moved a little bit faster. So you can see right now we have something like this. Okay, you have this one. This is your 15 minutes entry setup. We will put this one around here, and then right now we have a zone in the 50 minutes here. Okay, so that means right now we can also make another entry in the 50 minutes for a sniper trade. So from here, guys, you need to calculate the risk. Right now you are risking around 10 pips, and then the take profit will be the same as this one. So you can see we have a 50 minutes which is 1:8, and then we have the the 50 minutes, we have the 30 minutes here with a risk of 20 something pips, and then we have the 50 minutes with a risk of 10 pips. So let's say right now you have a $10 account. You have, let's say, a $10 account like this, okay, and you are willing to risk, maybe let's say you are opening a trade with zero, maybe your lot size is around let's say maybe 0.02, maybe 0.02 maybe, because you don't want to risk too much. So that means you will enter this trade, but you might blow your account. Okay, but if you are risking only $1 from here, that means the whole $10 is the risk. The whole $10, it won't be the risk of this trade here. So to blow this account, you will need at least to open 0.10. That will blow this account because you are risking 10 pips. So that means this, if you are risking $10, your full margin here, that means you will gain around 200 and something dollar with one single trade. So let's play back and see how the market unfolded from here. Okay, let's see. We can clearly see that the 30 minutes time frame trade has been triggered even there 15 minutes, and your entry is around here on the 15 minutes right now. So this is a sniper entry. That means you had no drawdown from this entry here. So let's play back a little bit faster without wasting any more time. As you can see, the market is still very, very aggressive to the downside. Okay, your first take profit was hit, and as you can see, the market will push lower only if you are doing the correct thing in the higher time frame. You just wait for the market to make a confirmation candle. So as you can see, we're closer to the second take profit level. Okay, so you will wait and see if the market will hit it. But from here, I can see a little bit of a retracement. That means you will be out, I think, around here. As you can see, it's playing around at this area. So I'll just pause around here. So as you can see, this trade was, you risk $10 and then you gain around 400 pips in a matter of few days or so. As you can see, let's calculate the days. Maybe you got out around here. That's almost a week from $10 account to $400 with one single trade. You don't need to trade every day. There's nobody who's forcing you to trade every day. Just wait for those perfect trading days only and just forget about it. So let's make another setup using only the daily time frame. You will see that the same thing always applies. Okay guys, we have this gold pair on the daily time frame. This one is going to be a little bit difficult for someone to understand if they don't understand price action properly. As we can see, gold is still bullish right now. We can clearly see that we have a bullish trend over here, but that doesn't mean the market will go straight up without even retracing back. So if you are looking to enter a sell around here, that means you won't even consider the market structure around here. You can't wait for the market to come here and then go up. So let's say maybe you want to catch a retracement around this area and you see this kind of pattern here. The one thing that you need to consider in the higher time frame is that you can clearly see that, okay, the market broke this high here. So that means the market has manipulated the previous high, which is this one. Okay, so in this case, what you need to do right now in this higher time frame, you need to draw your supply zone here. So the next step, you will target this low here. You will target this low, this green low here, and then from here, guys, what you need to do, the next step, and you can also see that you had a lot of news around here. You see, so the market might potentially reverse to the downside because we don't know yet, and will never predict the future of the market. Even if we are traders, we don't know anything that's inside there. So because we have this here, what we need to do right now is to put our horizontal line here on the open of this bearish candlestick. And we can also see that we have a supply zone. The market came to the supply zone and closed with a bearish candlestick. If you are new to this channel, we call this a confirmation candle. This is your confirmation candlestick. Okay, that means the market is confirming that we might potentially see a bearish trend after this candlestick has touched this supply zone here. Let's name this supply zone. Okay, so the next thing that we need to do right now is to move on to the lower time frame so that we can reduce the risk, because if we trade on this higher time frame, our risk will be a little bit higher. But because we are on gold, and gold right now is more than $2,000, so that means our risk will be a little bit higher than before. So let's start with the 1 hour time frame, because we are on the daily right now. Let's start with the 1 hour. As we can see in this lower time frame, we can clearly see that, okay, the market was moving higher like this. Let me show you. The market was moving higher. It made a low, moved higher, made a low, moved higher, and then it made a low around here. But did the market made a new high? No. It broke lower. And as you can see, this move here is very aggressive to the downside. Okay. But then this move here is very corrective. And as you can see, after the correction, the market has the potential to move to the downside. Let me explain this a little bit further. Maybe you'll understand. From here, guys, look, the market here made a move to the upside very aggressively, and then it started to be slow here. After this slow move here, we expect the market to move higher aggressively. As you can see, the market pushed higher following this previous impulse here, and then the market corrected again. So after this correction, we expect the market to do what? To push higher aggressively. Okay, so but the problem is that when the market reached this area, we can see that the market started to be fast around here. If the market becomes fast here and then it becomes fast again, wait and see what's going to happen next. And we can clearly see that the market here is started to be very slow. So that means the market is trying to follow the previous impulse, which is this bearish trend here. So that's why we see another impulse to the downside. So right now, what we have is something like this. We have a correction. So that means we'll be expecting the market to push lower after this and aggressively on top of that. So let's make an analysis. So from here, guys, we have this lower time frame, which is the 1 hour right now. So let's read closer here and understand what the market is trying to tell us using impulse and correction before we can apply our supply and demand zones and confirmation candles in this higher time frame, in this lower time frame. So from here, we can see that the market, and then it started to be fast here aggressively. And then it became fast again. But then we have a lot of candles here. So that means the market is trying to correct now. But where is our demand zone? Where is our supply zone from this area? The supply zone, we have a supply zone which is a little bit bigger. Okay, but then let's look at we have a break-in market structure here, but I don't like to consider this one, but I will consider it because we are in the 1 hour, because even if I move on to the lower time frame, I'll still see the break-in market structure in this area. And we can also see that the market manipulated this. So that means from here, we can still enter from here, okay, but the risk will be a little bit higher because we have this zone here. What I will do from here, guys, is use this candlestick here, the bearish candlestick, as my entry area, just to reduce the risk. Okay, so that means our analysis will be something like this, because the market moves in waves. It won't start by just shooting straight down like this. It will move something like this maybe, and then go lower. Why am I doing something like this, a slow move? Is because we have an impulse here, and then we have a correction. I am expecting a correction to happen around this area. So that means I will put my sell limit order around here. Okay, and then I'll put my stop loss above, and then we will target this lows here. We have a lot of lows here. Even this one here, we can still target it. Let's put a line around here. So this will be your analysis. And as I said before, we can still see a break-in market structure from this bearish trend. And another thing that we need to do from this time frame, we just put a sell limit order and wait for the market to do what it likes to do. But if you want to reduce the risk, we can still use the 30 minutes if we want. Let's see on the 30 minutes. We still have the same thing. Let's try the 50 minutes. We still have the same thing, but I won't even try to put my stop loss below because this move here was very aggressive, because we are using the supply zone from the higher time frame. So for now, let's wait and see what the market did after this. Let's wait and see. Okay, we are triggered, and as you can see, we are pushing lower and very aggressively. As I said before, let me pause this and explain. As I said before, the market is very aggressive to the downside and it started to be very slow. But look at the next move here. It's very strong, okay? So guys, before I end this video, I would like to say thank you for watching, and also please make sure that you are subscribed to the channel. So if you want more videos like this one here where I go deeper with different examples, please comment below. I'll make sure that I make another video like this one where I explain everything very deeply so that you can understand the market even better. And also guys, please go and backtest these things here. Also, you can also make a PDF and then send it to me so that I can make a review about it. To send me that PDF, please join my Telegram and then go to my group and then contact me so that we can communicate clearly. I'll help you for free just to review your things.